So I'd like to talk today about the differences between market neutral options trading and directional trading, or another way to put that is day trading, swing trading, intraday equity trading. Lots of names for it, but it basically comes down to the kind of trading where you make most of your money by large price movements in stocks or indexes or ETFs. So what exactly are the differences? And they're worth thinking about. Day or swing trading, successful months are typically highly volatile months where there's large moves going on in the market in one direction or another, or sometimes both. Whereas for market neutral options traders, the best months are actually those where the market is calm, particularly if the market was volatile and then gets calm, and you enter during the volatile time and exit during the calm time. Those are pretty good conditions for a market neutral options trader. So that's one difference, the kinds of environments where both types of trading succeed. Another contrast, which is very important, is what times of day you tend to trade these different trading styles. Most intraday equity traders are very active at the market bell, the opening bell, and they're also very active at the end of the day. Active at other parts of the day also, but typically a little less active in the middle of the day. Whereas for market neutral options traders, we've found that trading first thing in the morning or trading at the end of the day has a problem, and that is that the markets get more difficult to deal with first thing in the morning, where people are panicking and market makers are aware that they're panicking and charging very high prices at that point. And at the end of the day, you have people trying to go in overnight, trying to make their positions perhaps safe overnight or safer overnight. And so there tends to be some panicking that goes on at the end of the day. Both of those are not ideal environments for successful execution, and so therefore you try to avoid those times. So you try to do most of your adjustments, your entries, your exits at other than the very beginning of the market or the very end of the market. That's what most successful market neutral options traders do. Intraday equity trading requires heavy amounts of screen time, whereas there are a number of option strategies, which market neutral option strategies, where you need to look at the trade once a day and make your trading decisions, as opposed to sitting there all day watching your screen. In fact, we have a number of traders who are trading on our desk, trading firm capital. They have full-time jobs and can only take a look at the market, periodically during the day. We have a couple traders overseas who are sleeping during large portions of the market. And when they either wake up in one case or before they go to sleep in the other case, the traders make their trading decisions on a kind of a once a day basis. So it's almost the opposite of intraday equity trading as far as the amount of screen time that you need to put in. And finally, big moves in the market can create absolutely spectacular trading days. August 24th, 2015 was an unbelievably profitable day for our firm, and that's on the intraday equity side. On the market neutral options trading side, that actually was a difficult day. So the same market that was spectacular for our firm was not so good for market neutral options traders. So you see the contrasts between the two trading styles. Let's take a look at a favorable chart for a day or swing trader. This is one, it's very directional. The market's trending upwards very consistently, lots of up days, not that many down days. That is a very good chart for a swing trader who is bullish, for example. This, on the other hand, is a very good chart for somebody who is a market neutral options trader. This is a very flat market. You have fairly clearly defined support and resistance areas. Not perfect, there's never going to be a perfect chart, but it's one where the market seems to move up to certain levels, come off of those levels, move down to other levels, and come off of those levels and channel. And those are usually very favorable conditions for market neutral options traders. So what does all this mean to you? You may be a market neutral options trader watching this video, and you may want to consider learning intraday equity trading or swing trading to complement what you are doing on the market neutral option side. In fact, that's how I first met SMB 7 years ago, because I was interested in complementing my market neutral trading with directional trading. Conversely, if you're a directional trader and you want to smooth your equity curve, you may want to think about getting involved in market neutral options trading for a lot of reasons. From a time allocation standpoint, these are complementary practices, and so when you're least busy with your intraday equity trading is probably the time you'll want to get involved in your market neutral options trading. Your equity curve should be much smoother. Psychologically, you'll have always something working for you. If the market's dead, you can't find good opportunities in directional trading, you're probably having a good day on your market neutral options trades, and that's a nice feeling. Psychologically, you'll have some aspect of your trading which should be winning at all times. As I say, they don't interrupt each other very much in terms of your workflow. Of course, they can, but if you're a trader that has 3 or 4 or 5 trades going on at the same time, you learn how to manage things, and you would be easily, once you learn the discipline, be able to manage these things as well. So these are complementary practices in a very nice way. They not only from a practical standpoint don't tend to conflict with each other, but from a smoothing of your equity curve standpoint, they tend to complement each other. So it's something to think about with your as you're planning 2018 in terms of what skill sets you want to learn in that year. If you have some goals to broaden your horizons, you may want to consider doing the one you don't do right now. If you're a market neutral options trader, think about learning how to trade directionally. If you're a directional trader, you may want to think about market neutral options trading as a way to turn 2018 into a year that has a greater likelihood of being smoother from an equity curve standpoint. Something to think about, and we'll see you next week.